Certainly, the result of high prices will be more exploration, more investment, and more conservation. Markets always work, but markets are messy. People don't like the way they work, and the impacts are always a lag. It is very true that the cure for low prices.
In the world of commodities, where markets are often seen as unpredictable and sometimes messy, there's a fundamental truth that Rick Rule wants us to remember. Whether it's industrial metals driving our economies or precious metals capturing our imagination, the dynamics of supply and demand always come into play. Join us as we delve into the fascinating world of commodity markets, where high prices and low prices play a vital role in shaping the future. So, without further ado, let's explore the intricate dance between prices and the forces that drive these markets.
The industry, and frankly, society, has underinvested in productive capacity around natural resources for a very long time, 20 or 30 years. At the same time that policy prescriptions are constraining capital to natural resource companies. The worst of the times, in the sense that costs are rising for the industry, and there's a recession looming. So I think investors are right to be cautious in the near term and very bullish in the long term. I suspect it depends on who you are and what your timeframes are. It's odd, too, for me at age 70, with less time on Earth, that because of experience, I'm more patient, I think in 5-year terms and 6-year terms, while the 25-year-old Rick, with lots of time left on Earth, thought in 3-month terms or 6-month terms. For me, there's a certain certainty in the outcomes. Despite the wishes of the big thinkers, the world is short of energy. So energy prices, including conventional energy, will stay high for a very long time. Base metals prices will be high too, perhaps constrained by a recession between now and 5 years ago. But if you have an investment orientation that's geared to reality, that's geared to compounding, this is a very, very, very good time to be in the space. For speculators, and your audience need to determine if they're speculators or not, that the industry and society itself are willing to pay eye-popping prices for high-quality discoveries. High-quality discoveries are few and far between, and I would describe a high-quality discovery as one with at least 10 billion US dollars in situ recoverable reserves and resources. But I think even despite the recession, that speculators who participate in successful efforts in exploration will make a lot of money in the same way that they did in the early part of the decade of the 90s or in the early part of the decade of the 2000s. You can have a malaise in resource markets, and people will still pay up for discoveries simply because the discovery pipeline, the discovery financing pipeline, and the work pipeline has been attenuated for 30 years. I think we'll surprise ourselves because there was an exploration boomlet in the period 2002 to 2008 or 9. In my experience, it usually takes 10 or 15 years of focused exploration to begin to deliver results. And I believe that we're starting to see that result in certain places. An example would be in Guyana, where there's been focused gold exploration for 15 years, and now there are 2 or 3 discoveries. So I suspect that sooner than we think, we'll have at least a boomlet rather than a boom in exploration. I think something else that holds promise is the worldwide boom in lithium exploration, which at least in certain terrains, pegmatite terrains, will probably yield discoveries of materials other than lithium. I remember 30 years ago when there was a sort of a boomlet in platinum exploration. And while it didn't yield many discoveries of platinum, it yielded some very interesting nickel discoveries. I wouldn't be surprised if the current round of lithium exploration will yield discoveries of materials that like pegmatite terrains. Business. Uranium was priced well below the incentive price for current production or new production for a very long time. And the consequence of that is that the market has played catch up. While the market, in terms of the spot market, has played catch up, what you'll notice too is the increasing predominance of the term market over the spot market in uranium. This is important because it gives both consumers and producers some certainty as to the price of the commodity, and it allows project developers the ability to finance projects while guaranteeing a reasonable rate of return for their shareholders. I think mostly winners. Precious metals tend to do well when people are concerned about the efficacy of savings products denominated in fiat currencies and their maintenance of purchasing power. Anybody who isn't concerned about the maintenance of purchasing power in long government bonds, I think needs their head examined. Quantitative easing, negative real interest rates, debt and deficits, and the impact on pensions from the degradation of principal in the long-term bond market, to me, guarantee, they don't suggest, they guarantee the diminution of purchasing power of savings products denominated in fiat currencies. I don't see any particular way around it. You won't see the public realization of the crisis until the crisis is on people. And I don't know what price level that will be. It's pretty obvious to me that the big copper deposits in the world, with a couple exceptions, sort of look like me, well past their prime, 70 years of age. Look at Bingham Canyon, the biggest mine in the United States. I think it's 160 years old. The Chuquicamata, biggest mine in Chile, 115 years old. The newcomer, Escondida, is 40 years old. Humankind is living on deposits that are well past their prime. Certainly, the result of high prices will be more exploration, more investment, and more conservation. Markets always work, but markets are messy. People don't like the way they work, and the impacts are always a lag. It is very true that the cure for low prices is low prices. Low prices stimulate demand and they constrain supply. Similarly, the cure for high prices is high prices. They stimulate conservation, they stimulate supply. But it takes years in a capital-intensive cyclical industry for the market to work on either the supply side or the demand side. Is that gold moves first in a precious metals bull market. I suspect because there's a fear buyer, a motivated fear buyer. And when the precious narrative gets established among the investing public, then silver, perhaps because of its lower unit price, begins to move further and faster. Silver, the beginnings of the move in the silver market are usually an indication of the fact that we're halfway through a precious metals bull market. I'm not sure why that is. I just know from observation that it is. Speculators should note that the most volatile asset class in that sector are the silver stocks, simply because the market capitalization of viable or threatening silver equities is so small that when the generalist investor warms to the narrative, there literally is not enough market cap to accommodate the flow of funds that comes into the sector. I remember coming into the mining investment field in the 1970s and watching, as an example, a little penny dreadful called Coeur d'Alene Mines go from 10 cents a share to $65 a share. I was too new to the sector to know to participate. But the next time silver ran, I personally was involved in both Silver Standard and Pan American, which ran from 72 cents and 50 cents respectively to over $40 respectively in 6 or 7 short years. Those were very pleasant experiences, obviously.
As we wrap up our discussion on commodity markets and the critical role of prices, remember that markets, although sometimes messy, have their own way of finding equilibrium. Rick Rule's insights shed light on how high prices stimulate change and how low prices ignite demand. So, keep an eye on the ever-evolving world of commodities, where the intricate dance between supply, demand, and price continues to shape our industries and economies. Thanks for joining us in this exploration, and we'll see you next time for more insights into the fascinating world of commodities. But now please like, share, and subscribe to our channel.